Hello, everyone. Welcome to another Mortgage Leadership Outlook. Today, I am so excited to bring you a man who I call a hero to wholesale, David Schroeder, who is Executive Vice President, Third-Party Originations over at Calibre Home Loans. Excited to introduce my buddy, Dave. Dave, you there?
I am here. Thank you for having me.
Fantastic.
Good to
Thank
be
you.
with you.
Good to be with you. Always great to spend time with you. I mean, listen, I would love to not be spending time with you, where I'm in my studio here. We're ideally at a conference,
That's right.
talking about something exciting. But listen, there's a lot to be excited about. There's a lot to be grateful about. I mean, right now, I was having a conversation this morning. As an industry, we are going to be looked at as the group that's going to help us get out of actually this mess from an economic standpoint, from just a feeling good about our community. So this is just like there's never been a better time to be in the mortgage business. Listen, I want to talk to you about, because you just made the move to Calibre, just took the helm of the third-party origination business. So I want you to talk about that. But before we do, please, if you're watching this, if you're watching this live, please share. We want actually as many people to see this as possible. Dave's got a great message for you. I want you to please just share this with your colleagues. Tag them actually in the comments below. Dave is going to be answering questions. Hopefully you'll be asking them. So Dave, talk to us a little bit about what caused you to make the move to Calibre, because I'm going to bet money you probably had a pretty full dance card and there's something about the Calibre thing that made you say, I got to do this.
Yeah. So look, I've been very fortunate over my career to be part of some amazing teams, companies with incredible visions. So when Calibre had approached me, there were really three things that I had wanted to put through a lens of any potential opportunity. One of those, and really starting with, is the foundation of people. And as I got to know the team at Calibre, very seasoned executive team who's been through a lot and really has a diversity of experience, which is exciting to be somewhere where people had been at a lot of different places and were bringing different things and sharing ideas. The other thing is that they have a compelling vision, a really exciting vision for how they want to approach the market. And part of that is having a relevant foothold in each of the different origination channels. And so that really allows, again, a synergy of ideas and a stability over time to be able to meet the market in different places. And third, you can have great people, you can have great vision, you've got to have the resources and capital to execute on that. And what I saw from the very beginning was that Calibre wasn't just talking the talk, but they had the resources, organizational commitment, balance sheet to back that up. And so, from day one, I've been excited about that. And, I tell people, look, I had worked with a lot of the same people for almost 20 years in different companies moving around. And, my wife and I talk quite a bit about making a change and moving to Calibre, where I really didn't know anybody. And everything I could have hoped for has really been realized in the quality of people, just taking care of me. The AEs here are just absolutely amazing. The level of experience, the openness to new ideas, as well as to sharing ideas and helping each other. So it's been a joy. Really, it couldn't have gone any better except for this COVID thing that got in the way come March. But other than that, it really has been incredible.
So listen, I know your history, you've always been actually the kind of person and kind of leader that you think actually that there's a lot of benefit being face-to-face, right? Like this is your career. Most of actually the time, you've been in belly to belly with your staff, with your team members, right?
That's right. That's correct. And I think, look, I think most people have. That's just the way the world works. I mean, when I got into the business, we were using fax machines. I remember my first day, someone had to show me how that thing worked. So, we've all evolved over time. And I think that, even as relationships are so important and the outside, if you will, or face-to-face regional account executives are so critical for what they can do for a business, the business has changed as well with the number of brokers that are available, the use of technology and the ability now to really engage people in ways that simply weren't available 20 years ago. I mean, just the fact that you and I are talking face to face like this with a wide group, unthinkable 20 years ago that, on the kind of budget we're talking about, we could do that. That's a major television production just, 10 or 15 years ago. So it's opening up new opportunities. And for me, it's just a matter of, again, reaching more brokers to spread our message and our value, and being able to engage more talented people to do that. So, I think it's exciting. I know that, some of the teams I've been a part of in the past, and the view here at Calibre is that it's both. It's not either or, outside or inside. It's how do you do both to engage the most number of partners and share the best ideas most efficiently.
Yeah. So that being said, I mean, let's talk about engaging. Let's talk about rules of engagement now. And just give us an idea. And first, we got some people saying hello to us. So hello, Stacy from West Hartford, one of our fellow AmBiz team members. And what's up, Nas? Thank you for joining us. Appreciate it. And again, if anyone has questions for Dave, please do. We're going to talk a little bit about forbearance. We're going to talk about some other things that I'm curious about. But I want to just you're talking about engagement. What are the rules of engagement now? Like how do you reach out to brokers? Because listen, there are brokers that have been just impacted so differently. Some brokers actually were hyper focused on non-QM, and now they're shifting, like looking at what they can do to replace. There's so many brokers that are just doing so much business that are just slammed. They're slammed actually that they just don't have time to answer a call or answer a text. So what are the rules of engagement now for your account executives to try to find new brokers to do business with, or brokers that they're already doing business with that to help them do more business?
Well, I think that the rules of engagement really are the same as they always have. It's potentially just different ways that we engage. And look, I just start with the fact that in our business, marketing is education. Every account executive is only as good as what they can really teach and share with our broker partners. And so whether that's education about what's going on with forbearance right now and how they can participate in that, education about, to your point, if now a product set is gone that used to be there, and hey, here's what I'm seeing with other broker partners and how they're transitioning their business so we can help with that. I've always viewed the role of the wholesale lender to be a connector, that we've got all these different relationships, and how do we bring people together in different ways, and whether that's just through sharing an idea, telephone tag kind of, or if it's bringing them together in an event, or now we're seeing things like this where we can do virtual panels. That's really the key to me on the rules of engagement. And then, look, as we move into this world, we don't have the ability as an outside AE to go face-to-face anymore, but we still have the telephone. And we're really encouraging our account executives to use things like this, like Zoom, BombBomb, these kind of video tools where we can get with people in a different way. But again, I would just end with what we have really doubled down on is the education side, to share with people what's going on in the capital markets so that people can wrap their head around it and then share that with their customers, as well as the education of how to educate customers on what's happening with the market and their options.
Okay, so fantastic. So, I mean, let's talk a little about the capital markets. Let's talk about, what is the message that you guys are giving, to brokers, talking about it. And listen, we've seen actually some unbelievable things. We've seen actually people just don't understand actually, why actually, rates aren't down to zero. So let's talk a little bit about actually, some of the conversations that your account executives are having with brokers as it relates to the capital markets.
Yeah, I mean, I think there's, that's a really big question on what's going on with the capital markets because it drives so much. I'll start with, and I know our team is, starts to gag whenever I use the word anymore, but volatility. I mean, that's really the order of the day in everything. I mean, if things change from day to day, whether it's in treasuries, the TBAs, MBS, MSR valuation, all these things swing wildly day to day based on the news. Oil valuation being negative earlier this week, and so I think that what's important for people to understand and what we talk about is, look, everybody's going to have their own strategy. The main thing is to make sure that you know who you are and that you understand and your team understands why you're making the decisions that you are. At Calibre, we know we're going to be here for the long haul. And so what we are doing is operating with a maximum level of discipline in how we execute every day, because, whether you're looking at the levels of delinquency that could come based on the crisis that our nation is going through right now, what seems really bad today, and it is, could get worse. There's a plausible scenario that things get worse over the next couple of months. And, look, I don't want that to happen, and nobody does, but it could. And we have to be prepared for that, both for our team members, our customers, and our partners. And so we are operating in that kind of a mode. So, that's kind of the first order when you think about capital markets. The other thing is that, look, we're always going to be here. The mortgage market is foundational to our country. And so, when you think about decisions that we make every day, I think the main thing that we can focus on, the market is bigger than any one of us, but we've all got to focus as individuals on what can I do? And I've talked to REs about, just the next best decision I can make. And that's the way our LOs need to think about it too. What is the right thing to do right now? And then we'll make the next decision. Because if you try to get too far ahead of yourself and start predicting where things are going to go in a market like this, you're going to get hit. And so that's really what we're trying to do, whether that's on, overlays, things like that are never popular. But at this point, that's probably the best thing we can do, because the worst thing we can do is put borrowers in a bad situation that's going to hurt them at a personal level and hurt our industry because they don't perform, and it starts to get tightened up even more. So it's a fine balance right now. And as as I think we all understand, in a lot of cases right now, it's the least evil choice or the least worst choice we have to make. Nobody's going to be happy about these things. But if we understand why we're making them and what's on the other side, I think it makes it a lot more palatable for our team, our loan officers, as well as the customers they serve.
Yeah, and listen, everyone talks about actually the other side. That is the one thing everyone agrees on. There are people that say that values are going to take a hit. Some people say actually values aren't going to take a hit. There's all sorts of speculation about what products we're going to see available after that. But one thing consistently everyone says actually is that this is going to be a very sweet time on the other side of this, because we know actually that they're going to use housing to pull us out of this economic downturn. So
I read something really exciting today that I hadn't even thought. You think about the other side and when it happens, and what are the things you can be excited about. Just earlier today, I was reading about the huge opportunity that's coming on the VA market, because there's so many of our men and women in service that have orders to move right now, but they can't because it's all stay-at-home orders. But that's all going to open up. Whether that's 30 days, 60 days, 90 days, it's going to open up. And when it does, there's going to be a lot of VA action. And that's a place where, Calibre has invested a lot. And I know a lot of other people have in supporting our veterans, building teams around that. So that was my, there's always a few things every day that get me extra fired up. That was one of them this morning, thinking about that and where we're going to go.
That's exciting. I think it's probably a good time to have Brian Bergance as a guest in a couple of
always
of weeks.
A good time for Brian. Yeah,
100%. So listen, that's great. So listen, I want to talk to you about actually forbearance. Let's talk about specifically. We got. First off, Joel Berman saying hi from Long Island.
There he is.
All right, and Jessica, yes, go VA. All right, so the forbearance conversation is something that it is an ugly conversation. Because I keep having conversations with people actually who just look and see actually when you log on to make a mortgage payment, there's the button to make your mortgage payment, and then there's the button for forbearance. It's like borrowers are faced with this dilemma where it's just so easy to get the forbearance. And listen, services remember 2008 and about actually how difficult it was to get a loan modification. So they're going to be sure that you could not say it was difficult to get a forbearance. So talk to us a little bit about the conversation that brokers should be having when it relates to the forbearance and educating about options and getting people to stop and not hit that button until actually it's really thought out.
That's right. So I will look first. I'll kind of hit it from the existing client, because we know that our broker partners serve as a critical counsel to a lot of the customers that they help to close. And I think going back to the beginning, I think everybody has the best intentions here, including the government at this point, in trying to help people with this forbearance. I think the unintended consequence is that the way it was presented to a lot of people and the way the media presented it was that it was some kind of a payment forgiveness. And I think we've worked very hard as an industry to educate people that it is not that. It is basically creating, whether it's a 90-day or 180-day or a 360-day balloon. Which is a lot, especially when you think about at the human level, somebody who's already by definition going through hardship, and now they're going to come up with 3 payments or 6 payments. And so, first and foremost, it's a matter of educating people on exactly what the choice is and the difference between a deferral and forbearance. The other thing, that we've seen a lot of misinformation about is some of the other programs, whether that's bank portfolio programs or different government kind of programs that are very, very nuanced, and that customers believe that because they saw that headline that it should be for everyone, or because they saw that headline that it's offered in one place, that somehow the servicer is holding that back. And I think one of the best things that LOs can educate on is that, look, as it relates to forbearance for Fannie, Freddie, and any kind of Govy, FHA, VA program, the programs are what the programs are. There's no latitude from a servicer perspective on how that's treated for the customer. We are executing exactly as we can on that loan. And so, again, I think the best thing that loan officers can do is educate about that difference and stay in very close contact with their account executives about what any kind of policies and options are. So I'll just speak to Calibre from the very beginning. What we've worked very hard to do with our account executives and then educating our partners on is, if a customer calls you, what are their options? And in this case, it's, if you call the 1-800 number, initially we had set up an IVR when there was a really big push at the very beginning. Hey, Andrew.
Can you hear me? Dave, you there?
Yeah, you went out for a second.
Okay.
Yep. So now we have the 1-800 number and the website, so people can get through. So again, it's options, because early on, especially, people were getting really frustrated with long hold times because we were seeing unprecedented numbers of call volume. So again, that was a place where we really tried to work with LOs. And I think it does speak, if I could take a moment to talk about Calibre here, in the sense of, one of the values of retaining servicing is that we had a very unique insight into what was going on there and able to relay that information with brokers and get that back to them. And so, I am very grateful for the Calibre team on the servicing side that was, working very hard to support those customers and then get that back to brokers. And hopefully, again, at this point, it's not all about Calibre or whatever logo you're wearing. It's about the industry and our nation as a whole. Hopefully that education helped across all lenders, all customers, no matter where they were serviced.
Interesting. So, and I misunderstood you. So, if an inquiry comes in, you guys are connecting that borrower with the broker. You're so, like, if that's happening, even if it's a servicing request, did I hear that correctly?
That may be. I'm not sure if we got our wires crossed there. That if somebody called in for servicing and they were interested in a refinance, yes, we do refer them back to the broker. We offer that back to them. That's called our Reconnect program. If the customer calls us about a forbearance, certainly we're going to take care of them directly, because the broker can't help with that.
So listen, you're a broker guy. I mean, listen, you've been Wholesale. So Decision One. Were you in Wholesale before Decision One?
No, that was my introduction in 2001.
Okay, so you're a broker guy, and listen, one of the awesome things I love about Calibre is so well respected in all actually divisions, but. Okay, this is just you and I talking here. You are a broker guy. You cheer for the mortgage broker. You cheer for the Wholesale channel. And listen, and I can't help but feel actually that through this all, like, it is a great place to be actually in the broker position. Because the broker actually has the ability when one company actually has a little bit of difficulties and they have to actually raise their minimum credit scores, they can go to all these other companies. So do you feel actually that this is just an amazing time to be a broker?
I do. I think you're exactly right. that this is where a broker shines, because to your point, there is the optionality, and you can find that lender in the market space that has an appetite for that kind of risk. And look, that's an incredible value proposition, and arguably a lot more valuable than price at this point, and which is still a value of the broker. And as you say, I am a cheerleader for the wholesale channel, and I think there's never been a better time to be a broker in the marketplace. I will trumpet that from the rooftops, that the fact that there's been this democratization of technology, where it's unthinkable 5 years ago that any broker can have their shop, can publish to millions of people over social media using high-end video capabilities, can outsource to have an online 1003 LOS kind of solutions, just like the big boys do. So it is really amazing what a broker can do to offer the convenience of a large bank, non-bank lender, to apply, to engage, to connect. And at the same point, you can come right in and see me face to face if that's what you want to do. I mean, it truly is the best of all worlds. It's a very exciting time.
Yeah, and listen, I love I love the fact that the independent mortgage companies, the mortgage brokers out there, they're keeping the monies in their communities. I mean,
That's
it's right. Like the owners actually are spending money in their local communities. The top originators are there. Many cases, the originators are going to get paid a little more when they're working for those independent mortgage companies. So there's so much actually benefit to working with independent mortgage companies, working with these mortgage brokers. So I think it's just awesome to be able to have the power of a Calibre, and knowing actually that you're retaining so much of your servicing. So when I'm going to be originating a loan that's going to be a Calibre loan, that actually loan is going to continue to carry my name on it. I don't have to worry about actually being sold as much as I would with a lot of these other companies.
Yeah, that's right. And look, like anything, I'm not one of these people who would bash the decisions of a lender who wants to sell their servicing. That's fine. I just think it's one of the decisions we've made as a company, which is powerful and relevant for people to consider, because that's going to be important to some customers and some brokers. And so we're really proud of the fact that we're able to serve that market, and many others. But that's one of the things that we bring to the table, and we continue to build upon that, whether it's the leads provided, again, or the education, or just the access to that customer for life.
And so in your career has always been actually a company that's had an origination side of the that's been connected to servicing. Like, so if you look actually with goes back to the Decision One, goes back to QLMS,
Yep.
It's always actually been focused, and actually that's right, you were Service Mac. So you've always been very, very connected, to the servicer. So does that give you actually a unique perspective on kind of connecting the broker and the servicer? Because there is actually a big disconnect where like a broker, okay, the first payment was made, I'm going on, but it seems actually your career has been focused on kind of like almost uniting these two together.
Mm-hmm. I think what's interesting about that, and even listening to you say that, is that I think, like a lot of people who started the same time that I did in the industry back in the early 90s, at one point I was selling the loan, collecting the loan, drawing the docs, doing everything at a small finance company in Colorado. And so, I think that from a very early time, it's just been indoctrinated to me that the holistic life cycle of the customer is important. It's not just one piece. It's people's lives that we're dealing with, and it's not just how you originate it. It also flows through to the operational side, the experience that they get through the process and the closing, and then on to servicing. And how does that impact their life? And where do we come back in, whether it's for refinance or their next home? And so that you're right that I've had the opportunity to work in a lot of different environments that have given me that exposure and an appreciation for what those all mean as an interconnected whole, but also, how to maximize, I think, those connections, because there's really interesting ways that each of these can play on each other. And I would actually extend that out to channels of origination. I am a huge believer, and to your point, everywhere I've been, there's been multiple channels of origination, and I do believe that there's power in that for the broker. I don't view that as competition. I view that as something that reinforces each other, because you're able to share really interesting ideas that are important. Just like we get brokers together and they share great ideas, the same thing happens between channels. I get to learn from what retail is doing, for example, at Calibre every day, and share those kind of concepts with our brokers and in our internal team. Hey, there's something we can learn there to do better here. So there's a lot of power in that.
Yeah, listen, I look actually with your history. Quicken itself was an unbelievable marketing monster. Calibre is known actually on the retail side to have some unbelievable top originators that work for them, some of the best in class originators. And as brokers, the brokers actually benefit from the things that they're going to learn. They have access to all the resources, and I just think it's just so important to know actually that when they're doing business, that loan is going to stay with Calibre. The broker's name is going to be tied to it. Samir, I love this. Yeah, collaboration is key, 100%. Amen, Samir. I've got
good man there.
He is, yes. Yes, indeed. Got a couple of other comments here from Melissa from calling from my team. What do you predict will be the long-term effects on forbearance will have on the housing market and concern for increased delinquencies? If you want to make a commentary on that.
Yeah, I think it's hard to say what the long-term effect is. I mean, certainly the short to mid-term effect is severe, because these are people's lives that are going to have to come up with these payments, are going to have to, either refinance and it'll change their life in that regard, a higher payment. Something is going to happen, and it's probably not a great outcome, or as good as an outcome as if we had never run into COVID. Now, that said, I have 100% faith in the industry and our government that we'll get to the right place on this, and we will take care of these people. We always do. And so, I'm very, very bullish on both what Calibre will do, what our industry will do, and ultimately what the government and our industry associations are all working to do. That is one thing that I will say coming into this crisis that has really been revealed is the power of teamwork. I spend literally hours every day with a cross section of my team members at Calibre, hours every week with different trade associations, hearing what leaders are doing. So it is a time, I think, where it amplifies more than ever that we are all in this together, and we've got to come up with solutions that build each other up. And so I'm, when you talk about long-term implications, I really believe and I hope in the bottom of my heart that's one of those things that really sticks with us, the solidarity between everybody in the mortgage industry, whether it's servicers, wholesalers, retailers, et cetera.
Yeah, listen, I mean, you're 100% right. Everyone's actually in this together. There's I hate to use it, there's no one better now, and everyone's coming together. It's amazing to see actually the leadership just from all associations just really rallying together for the benefit actually of the borrowers, making sure actually we protect the borrowers. And just I brought that up again, Samir, collaboration is key. I couldn't agree with that and any more than we do. It's just so important right now that we get together and do everything we possibly can. We have Joel just said what takeaways what takeaways that are positive that you believe were created during these difficult days will carry over moving forward. So let's talk about some of the things that you think actually that are positive things about it. You've talked about some of them, but let's see if we can answer Mr. Berman's question on the positive takeaways. Besides actually the fact that we know actually the industry is going to go through a major boom, we're going to be used actually as the tool to pull us actually out of the economic downturn. So what are some of the positive tools, like the tactical things, things like this?
I mentioned earlier just some of the things we're doing on servicing, and so I'll just start there. That I think one of the servicing is a very thin margin business, and so the more you can get people to use online services to self-help where they can, the better. You want to use people for what people do well, which is empathy and more difficult problem solving. So that's always been a challenge with servicing. How do you get people to not call the 800 number first, but go to the website? And it's incumbent upon us as a lender or a servicer to build great interfaces and usability. And we've really seen through this crisis more people going to the website, whether it's to make their payments or to learn about forbearance. That's a good outcome, because that means more people can help themselves, brings down the cost of servicing, creates a better price, all these things that are positive out of it. And I think, the same thing goes for more of us working from home. I've just been absolutely amazed. And I can only speak to Calibre, although I hear the same thing from a lot of my friends at other lenders. I've just been amazed at what our operations team has been able to do. I mean, literally moving from working together to working from home overnight and still having terrific production months without any kind of noticeable blip in the service that we deliver. And so that's pretty incredible. And again, I've heard that from other places. And you have to think that's going to change the way we work as a nation. When you think about it as an industry, hey, I mean, I as you mentioned at the beginning, I'm a people person. I would rather be with people, all things being equal. At the same time, flexibility is great. Choice is great. So if I have the option of, hey, you know what, more times than I used to, it's going to make people comfortable and make me or give me a better lifestyle to work from home. That's a good outcome. And so I think that's true for, loan officers, operations people, everybody in the business. So I think that's another really good outcome. And then again, like I said, I think there's a really positive outcome here in people working together, not just because it makes us feel good and it's the right thing to do, and it is, but at the same time, I think it generates better ideas. I mean, the more we get used to collaborating, the better ideas we're going to come up with, and whether that's in product development, technology, et cetera. So I'm really excited about that as well, of where that can take us as an industry as we think about where we want to go.
Yeah, I've talked to a lot of people that have said that productivity has gone up, and your people are just doing things that they never thought they could do. And listen, and could some of it be possibly because we're trying to not actually, focus on the horrible things that we're seeing going around the world? Possibly, but I think actually a lot of these new norms of being more productive, using tools like this are things that we're going to see beyond just this the temporary pain that we're going through. So Armando Barbosa, I mentioned this, in Texas, mortgage brokers must maintain a physical office. Realtors cannot work from home. And in this environment, moving forward, do you see mortgage brokers being able to work from home? So just curious, obviously the whole thing about realtors. I mean, realtors, they're obviously, while there's some work that they could do from home, most of their work is traditionally not done from home. It's done from someone else's home that they're trying to sell. So how are realtors dealing with this and adjusting? Because you and I both know stuff is still closing, and this is new sales.
Yeah, I think people are getting creative, as people always do, and whether it's virtual home sales, which again, I can't imagine doing that, but we are seeing and hearing more and more about that people are touring the home virtually because they've got to make the relocation. The other thing, to Armando's question, that I think is really powerful is that, yeah, that's the way it is in Texas today. But you think about changes that are going on. We are seeing an acceleration of the conversation, for example, around remote notaries. And the online e-closing kind of thing, where it's been held up in a lot of states for a long time. Hey, this has been a massive impetus for change and accelerating that conversation because their constituents in those states need it. And so I think, as you look at that's another great change that could come about. We get faster to a national standard on the remote online notaries, as well as, just to your point, maybe people become more comfortable with working from home, and that becomes less important to have to hang a shingle if you don't need to.
Yeah. Fantastic. Got a follow-up comment from Joel. While Calibre is the conduit for forbearance, what role do you think mortgage brokers can provide for consumers to give advice on taking that? I know you talked about using the technology. So if you want to add anything onto that.
No, I think the most important thing that a loan officer can do is to, as always, be a good listener, to really understand what the customer is saying, whether it's about a current loan and getting a forbearance. But, look, I think all of us understand that the key, and there's many keys to being a great loan officer, but the real fundamental power of a loan officer is listening and taking a great application. And that's probably never been more important than right at this moment, to
Yeah.
really understand what's going on with that customer, related to their employment, related to what the projection is. Because again, the worst thing we can do is put someone into a loan that they're not going to be able to deliver on, and that's not going to fit what their lifestyle is going to be in 30 or 60 days. And look, that's very hard to predict. But again, that's part of the power of being a loan officer. You're listening, you're asking good questions, and maybe it's not even you that needs to answer that question. If you're asking the question of that customer, and it just causes them to pause and think about their business, what's going on, and is this the right time? And maybe it is, and that's great. But thinking about these kind of things in a really deliberate manner is always a good thing.
Yeah, yep, and letting him talk. Listen, we always it goes back to the thing. Selling is not telling. Having actually the borrowers speak. We had Carl White was on. I think last week was, and he gave because he's the master of coming up with these great scripts, and he had a very simple script of just calling all of your past clients and just say, how are you? How is it going with all that's going on? And just leave that open and let people talk, because you don't know if the person you're talking has just lost their job. You don't know if the person has just had their business shut down, or if for some reason they found actually an opportunity within their business to blow up, and they're just having some of the best months of their entire career. So you just got to be, you got to be very sensitive to that and be empathetic when actually if there is something negative going on, because there is so much opportunity out there. There's no question about it.
And I think, to that point, that's a great, always a great advice to listen more than you talk. And, I think one of the powers of a loan officer in a local market particularly is being so well networked. And so by listening, it may not, and actually probably won't, result in an application or a loan 9 times out of 10. I mean, that's kind of the game of having a long-term relationship. But what you're always looking for is that opportunity to help and to serve. And so, if you open it up like that in an environment like this, it's hard to believe there isn't something that somebody either needs or is looking for or trying to figure out. Hey, where can I get toilet paper? Hey, I got a hot lead. There's something out there, right, for everyone right now.
It's good. Yeah, listen, at this point, and there's something actually you said actually earlier in the conversation that just stuck with me, the volatility thing. I know actually your sales staff doesn't like when you use the term volatility, but during times of volatility, being a constant voice, from to your borrowers, to your community, is something that could provide something that just could be there for them now and also for the future.
Clarity and confidence. I think that's what it comes down to. As any leader, and as a loan officer, you're a leader because you're helping, you're leading your customers to the best possible decision, and that's what leaders do: provide clarity and confidence in troubled times.
Yeah, volatility. You fight volatility with clarity and confidence. I love that.
Yep.
That's fantastic. I think that's the thumbnail. I think we got
there
that.
You go.
We just figured out the thumbnail for this video. So that's awesome. I really appreciate you taking the time to talk about this and and how Dexter could to manage through this uncertainty. So I just wanted if someone wants to get a hold of you, do you mind if I throw up your email address on the screen?
No, please do. Would love to connect. Always looking to meet folks, and I'll be out soon. As soon as the governor clears me, I'm out of here.
Fantastic. Now, physically, where are you right now? Are you still in North Carolina?
I am. I'm in Charlotte, North Carolina.
And have you been spending a lot more time, with your family, or is your day starting actually, early and working until actually, you're falling asleep actually at your desk? What is the typical Dave Schroeder day like?
Yeah, so I usually get up about 5 in the morning. I'll go for a run. Now I do a little of my own self-made CrossFit out in the driveway. And then I'll come upstairs and start working. And slowly my family has isolated me to a windowless 6x10 box because they've got their own lives going on around them. But, I'm losing all color because I live like a hermit now. But good. I'm very excited for opportunities like this to talk to you and your audience.
Yeah, my family sent me down to the basement. I'm in my basement right now. I'm in my basement, and actually every once in a while I get a text from my wife. Hey, can you do me a favor and take the stuff in the wash and put it in the dryer? So
Yeah.
I've become actually, I've been sequestered to the basement, and on top of that, actually I've also become the laundry boy. So
That's right. Weekends I get 1 hour of sun and yard time. It's like luxury prison over here.
Yeah, this is like prison. This is like prison, but so are you working more hours though than you've ever had before? Because listen, I'm assuming actually, knowing the companies that you've worked for that have always been leaders, you're working actually, for Calibre now. So I'm assuming actually you're probably working pretty hard.
Oh yeah, absolutely. I mean, absolutely. To your point, I'm a passionate person. I enjoy at what I do, and like I said at the beginning, I'm fortunate to have worked for some incredible teams. And so, yeah, I'm working very hard. I would say I'm probably even harder than ever, just because of everything going on in the marketplace. Yeah. And I think it's everything that people talk about as a cautionary tale of working from home. You never really leave it. I mean, it's always right there. It's hard not to think about it. So, look, like I said, I'm very fortunate. I'm very grateful, and I'm excited about what we're doing at Calibre today and where we're going in the future. So it's hard not to work a lot. But again, family lets me out. I'll spend some time with them as allowed.
Fantastic. And listen, if you're not doing business with Calibre already and you're not signed up, please, email David. He will get you in touch actually with whatever you need to do to get started. So definitely, it's a great time actually. Between all the resources that you provide, I love actually the fact actually that if I'm a broker, I'm an originator for Calibre. That means actually I don't ever have to worry about actually my borrowers being called or by anyone else besides me. And if the borrower calls, those leads are going back to me. I think there's just priceless things that just basically connect the broker to the servicer. So it's all great things. So
yep.
Thank you so much for joining us. We really, really appreciate it.
Thank you. Stay safe.
Fantastic. All right, everyone. So thank you for joining us for another Mortgage Leadership Outlook. So next week, I'm so excited to get another roundup of great guests. We got Carissa Robb, who is going to be joining us. She's actually part of a team that's developed some AI technology for servicers that's helping them deal with loss mitigation, helping them deal with forbearance, helping them deal with defaults. She got actually into actually her career in 2008 and quickly was made actually an executive vice president or senior vice president for TD Bank. So she's going to be Monday. Matt Ishbier on Tuesday. Always exciting. I mean, there's no one actually that has more energy and excitement than Matt Ishbier. We're going to ask him actually, if he's really willing to commit to sleep on the couch before he fires a UW or has any layoffs. That's going to be exciting. And if you know Matt, that's definitely him. Jerry Schiano coming up on Wednesday. So excited to have Jerry to get his perspective about actually, what went wrong in the capital markets, talking about the home equity opportunity as soon as as we're able to get a hold of this. And wrapping up the week, I told everyone that I would have a very exciting announcement. Patty Arviello is going to be wrapping up the week next week on Thursday. So Mortgage Leadership Outlook every Monday through Thursday, 4 p.m. on East Coast time, 1 p.m. on Pacific. You can catch us here, catch us on YouTube, catch us on Twitter. Thank you so much for watching. We really, really appreciate it. Please like, share, comment, do whatever you need to do. Get this message out there, and we will see you next week.